also the Central Council member. So initially thought of joining now, but due to some late in the flight, and he'll be joining lately. So straight away we'll start the session. We'll start the session with our institute motto song. You need not stand, just as a matter of respect, please place your hand on the heart. Ramesh, please play the motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
Thank you. We don't need much introduction for Jomon sir because he is well known to everyone. But as a procedure, we are just introducing him. So Jomon sir is an immediate past chairman of SARC. He's a qualified in 1992, did his articleship in Chennai. He's having 28 years of diversified practice experience. He's also founder partner of JVR and Associates. And they have office in Cochin, Trivandrum, and an associate office in Dubai. He has done more than 800 presentations across India and in West Asia as well. And he is serving ICAI as a peer review trainer and also contributes articles to ICAI letters. He has served as a member as AASB during 2005 and 6. And is also faculty for auditing from Ernakulam from 18 years and is also visiting faculty for B schools, management institutes, etc. Conducted training programs for the income tax department, MCA and other bodies, and also is also a board member in St. Teresa's College, Ernakulam. Was honorary treasurer for the Regional Sports Center, Cochin. So he's a son of late G. Thomas, is a HW graduate, sir, and also late Mary Kutti George. And he is happily married to Bindu, ma'am, and he's a PG holder and a rank holder at PG level and a home worker, and he's blessed with 2 kids, Leah and Ryan. So with this, it's your time, sir. Please start the session and move forward. In the meanwhile, once Prasanachar chips in, we'll have a word with him as well. Thank you.
Just give me a minute. Just give me a minute.
Sure, sir, sure.
Slight problem with my touchpad. Let me just see. Am I audible?
Yes, sir, you are audible.
Yeah, okay. It's like I have to just log out. Give me a minute. I'm extremely sorry.
Sure, sir, please.
Am I audible now?
Yes, sir. Yes.
Yeah. Sorry for the takeoff trouble. Good evening to all of you. Extremely happy to see a good number of participants. It's still ticking in. I'm a little sad that Kishorji cannot join. He's down with fever, I was told, and hoping that Prasanna would join at some point of time. It's a patron for me, as all of you know. Wanted to come to Vijayawada for a physical meeting, but I was held up in Cochin. So I said we'll do one online after a long time. And now the online meetings have become out of fashion, and all of us would like
Yes,
to
sir.
together in large numbers. I always enjoyed the visits to Vijayawada all the time, including the conference we had during Nagavalli ma'am's time when I was chairman of the southern region. So great, pleasant memories of Vijayawada always. And Chinnamasan, I don't know whether he's online. He's your ex officio. I don't know whether he's online. If you are there, Chinna, good evening. And once again, a warm welcome to all of you to this presentation auditing standards. Jayant this very brilliantly made the introduction, makes my job very, very easy. And as he rightly said, peer review has been extensively extended to cover almost all practicing chartered accountants in three different phases. We will see as we go by. So today, any discussion on auditing standards have a lot of importance in the wake of peer review, because one of the major considerations, those who are peer reviewers here and those who have undergone peer review would agree with me that one of the most important major considerations in hello, Jayant,
So audible, sir, audible.
audible. Okay, fine. Yeah. So therefore, that is one of the most important considerations in peer review. So that is how we have structured the topic as auditing standards in the wake of peer review and bank audit. Seems to be having some more problem. My screen is slightly. Am I audible?
Yes, sir. Yes.
I'm trying to share the screen. Let me see that Zoom screen has some technical issue. Just bear with me for one more minute. Just give me a minute. Sorry. Problem with this. Yeah. There's some problem with the system. Maybe I'll have to switch. I'm just trying to switch to another laptop. So this is a discussion we were about to start on the auditing and auditing standards, or otherwise commonly known as standards in auditing, in the wake of peer review and also the bank audit. So it's going to cover almost every one of us. So that is where we are. And today, when it comes to auditing standards, we have the AISB Auditing and Assurance Standards Board, which formulates standards, and there's so many of them as on date, where we have. Let me switch.
Is it a video of
Sir, unmute yourself, sir. You are co-host.
I hope I should be through with this. And let me also try to share the screen. Is the screen visible now?
No, sir.
No, sir.
സ്ക്രീനിലേക്ക് വന്നില്ലേ? വിൻഡോ എടുക്കാം. വിൻഡോ ഷെയർ. ഷെയർ അല്ല നീ അടിച്ചത്. ഷെയർ അടിച്ചത് താഴെ വിൻഡോ എടുക്കുക. വിൻഡോ എടുക്കുക.
വിൻഡോ പിന്നെ കാണിക്കുന്നില്ല.
ഷെയർ അടിച്ച് നീ ഷെയർ അടിക്കും. ഇതിന് മുകളിൽ കണ്ടോ ഷെയർ?
വീഡിയോ
Is the screen visible now?
Yes, sir. Yes.
Jen, is the screen visible?
Yeah. Yes, sir.
Jen, can you hear me?
Yes, sir. It's good. Please carry on, sir.
No, but ഇതിന്റെ വോളിയോ അവരുടെ അവിടെ ടോട്ടൽ വോളിയോ സിസ്റ്റം വോളിയോ. Yeah, okay. Sorry. Let me share. Is the screen visible now, Jayant?
Yes, sir.
Jayant, I can't hear you.
Share the PPT, sir. Share the PPT.
Is the screen visible now?
Yes, sir.
Okay. Yeah, finally, I think made it. Sorry for the trouble. So the question is, are we doing it right in the wake of peer review and bank audit? And whenever we talk about essays, the general thinking is that this is only for, metros and large corporates. That's the thinking which generally is amongst the membership. But let me tell you that the standards in auditing will apply wherever there is expression of opinion. Recently, we had a presentation in a All Kerala conference where there's a lot of debate on this. So let's just take, for example, a non-corporate tax audit. All of us do many of that. Now, the past problems of doing more than 60 has been resolved by the Supreme Court. And from 1st April 2024, the limit of 60 has been reinstated. But then the institute has been given the freedom. That's something else which we have to discuss. But then here is a case where in a Form 3CB, in a non-corporate tax audit, there is expression of opinion. In a bank audit, branch bank audit, there is expression of opinion. So with all that, it is very, very important and imperative that we need to comply with standards in auditing. So when you go to smaller towns in Kerala or Andhra Pradesh or wherever, people tend to say this, but let's be very clear that standards in auditing have equal applicability and equal force as much as in any tax audit, non-corporate tax audit, as much as it would have to Reliance or a TCS or all large corporates. And where is it is not very important. What we do an audit, and if there is expression of opinion, yes, there is applicability of standards in auditing. Jen did mention about this, but this is the peer review schedule. If you look at the last slab or last slot, firms
The PPT is not visible, sir. Are you sharing anything or like we are able to see only this?
Yes, give me a
So
minute.
share the PPT, sir.
Okay. Is it visible now?
No, sir. No, sir. Actually, you are sharing the current screen, sir. You share the PPT or like, please share the content with us, sir. We'll share the PPT from branch side.
I shifted the laptop. That's the issue. Just give me just send it across. Yeah, Vijayawada at ICA.in. Send, sir. It's already sent.
Ramesh, please check the PPT once we receive the mail and you share it with the screen so that SAR will directly start the session and you can roll this PPT.
You're trying to share from there?
1 minute, sir.
Yeah, no problem. It's the trouble from my side, so you don't have to be apologetic. I have to be apologetic. Extremely sorry. This doesn't happen normally. I changed over to my son's laptop, which is brand new, so there's some features which not obeying me as much as it should be. Control 1. Standard on quality control, that's SQC1. That's mainly about how to maintain, enhance the quality in an audit. And the other standards are broadly classified into engagement standards. So SQCs and engagement standards. Engagement standards are further classified into four different categories. There are standards on auditing, standards on review engagements, that's for limited review, standards on assurance engagements, that is assurance other than audits, and standard on related services. That is how the classification is. Have you received the mail, sir?
Yes, sir.
Yes, sir.
Yeah.
Ramesh,
If you can
please
share
share
the
that.
screen, if you can share the screen, it'll be nice. And no, first time such a thing is happening. Anyway, yeah. Are you navigating the slides? I can see the slides now. The first slide, you can view it there. Can you make it a full
Yeah.
screen? Okay, yeah, okay. That's okay, fine. So that's where we are. Can you go to the next slide, please? I don't think I can navigate from here, right? You have to do it.
I will navigate the slides, sir. Please go on. Go ahead.
Sorry?
I will operate the PPT, sir. You have to go.
Yeah,
have
you go to the next slide, please. Yeah, this we have discussed. Next slide. Yeah, this is a new classification I've been talking about, SQCs and engagement standards. In that, we have standards on auditing, standards on review engagements, assurance engagements, and standards on related services. We'll see that one by one as we go by. Next slide. Why do we comply with standards in auditing? Is something which we ask, do we really have to? Yes, all of us have to. There are multiple reasons to expedite audits effectively in accordance with accepted auditing practices, utilizing resources effectively, to guide and direct supervisors, assistants properly, to ensure quality control, because without compliance with standards in auditing, quality control will remain a distant dream, to disprove charges of negligence, and to face and pass peer review. This is the topic today, to face and pass peer review. But there is a much bigger, much stronger, much louder reason to comply with standards in auditing when it comes to audit of companies. Next slide. The Companies Act 2013 makes it categorically clear. Now, the Companies Act 2013 now is 11 years old. But this section was there right from the beginning. For the last 11 years, it was there. Section 143 falls in Chapter 10. Chapter 10 deals with audit and auditors. And the Chapter 10, 143 is the most important section as far as practicing chartered accounts auditors are concerned. It is about powers and duties of auditors and auditing standards. So, in the caption of the section itself, they have mentioned the term auditing standards. And this says in 143 subsection 9, it says every auditor shall comply with auditing standards. So under the Companies Act, it is mandatory. Companies Act, it's mandatory to comply with all these auditing standards. And in the non-corporate sphere, we have already seen that if there is an expression of opinion in non-corporate audit, there also the auditing standards will apply with equal force as in that case of a corporate, as we have discussed earlier. Next slide, please. And this is something which may not be the right thing to do, but a very shameful remark made by one of the earlier MCA secretaries. I think Sinjiti Srinivas is from your state. And before his retirement, in one of the meetings, he made this mention that, we do not expect the auditors to see the needle in a haystack, but they should see at least the elephant in the room, must see the elephant in the room. This means that there are a lot of audit failures. Auditors are a little casual about their work. Therefore, this is one shameful remark which he has made, which is prelude to what we are going to discuss. And how can we change this? How can we change this perception at a very higher level of the ministry or in the MCA, or which also little bit echoes in the PMO, and therefore we are seen with some bit of disfavor. And so that is the case. If we have to change, then the first thing we have to do is that we have to do the audits or discharge the attestation function in total compliance with standards and auditing. We'll see those standards one by one. Next slide, please. Now, before we go into that, we have a quick look at the audit processes, some of the things which we have been doing. But off late, in the last many years, if you see, most of the time auditing has been reduced to a compilation of financial information, preparation of financial statements, and then the tax filing. So audit considerations, unfortunately, have taken a backseat. So let's just do an introspection of some of the basic things which we have been doing. Opening balance checking, are we doing it properly? Internal control evaluation, communicating findings to those charged with governance. Vouching, that is checking the details of transactions. Ledger analysis, verification of assets and liabilities, are we doing it? We have to, if we are not doing it, we have to do it. Next slide, please. Yeah, comparing financial statements with books of accounts. Do we have a final authorized, duly signed trial balance for our records? This may sound slightly old-fashioned, but this really has to happen. This really has to happen. Only then we can be clear about what we are doing, and it's very, very important. Accounting standards compliance. If I ask you a question, how many accounting standards have we today? We have 29 minus 2 accounting standards. And we have in the higher sphere of companies, listed companies, and companies with net worth exceeding 250 crores, we have Ind AS, the applicability of Ind AS, which is there. So that's also very, very important. And therefore, AS compliance. Schedule 3, the new format of financial reporting by companies. The revised Schedule 3 is very demanding. A lot of information has to be given there. And whether that compliance is happening during the course of an audit, we're checking the compliance. When we say checking of the compliance, some of you may be laughing, because in the case of listed companies, in the last 32 years of my practice experience, it tells me that with due respect to my colleagues in the corporates or in the industry, many of them do not consider that as their responsibility to prepare sensible financial statements which are compliant with Schedule 3, which are compliant with accounting standards or Ind AS, as the case may be. So we are invariably most of us on the screen today together are SMPs, small and medium practitioners, large number of sole proprietors. So we are forced to prepare the financial statements of many of the corporates. Non-corporate, of course, it's everywhere, that's the scene. So with that, the auditing considerations would take a backseat. So we have to ensure that the Schedule 3 compliance are proper. Analytical review, overall test ratio analysis and things like that we have to essentially do. And Caro points. Caro 2020, as you know, it has become very, very demanding. Lot of new reporting requirements, but you might be knowing that it's not applicable to a small company. So small company definition also has undergone a change. And as it stands now, if the paid up capital does not exceed 4 crores and turnover at the end of the for the preceding financial year does not exceed 40 crores, both these conditions are satisfied. You are a small company. Once you are a small company, you are exempted from preparation of cash flow statements, and also your CAROB is not applicable to small companies. OPCs and dormant companies are also exempted from cash flow statements. So CAROB point, this is how it is. So next slide, please. We'll start with the standard on auditing 200, SA 200. Now we are seeing somebody, looking through a lens. The auditor can't just be a watchdog anymore. That is all the Kingston Mills cotton case where it was said that the auditor is only a watchdog, not a bloodhound. But this standard is a takeoff standard. I would like to call it a runway. And this standard leads us to other standards. For example, SA 200 says that the auditor should document his work properly. This is expounded in SA 230 audit documentation. SA 200 says the auditor should collect sufficient appropriate evidence. So how to collect evidence, how to evaluate evidence, how to draw conclusions from the evidence collected, the methodologies involved, all that is expounded in SA 500 audit evidence. That's how it is. But here one thing which has been highlighted is professional skepticism. What's professional skepticism? Being a little skeptical about having a questioning mind. We all deal with different types of companies, different types of corporates, where the self-interest of the management, or maybe some employees who are not, so righteous. So we have to be extremely careful about the explanations that they give. So skepticism would mean that we do not take anything for granted. We take it with a pinch of salt and a bit of pepper if need be. That's a spirit of professional skepticism. And I know some of you are aware about the irregularities that happened in the IL&FS, where one of the multinational firms were also involved, irregularities to the tune of 92,000 crores. And the NAFRA, the National Financial Reporting Authority, did a very detailed study. And they said, finally, they came out with the 305-page report. The crux of the report, there are two things. One is the firm and its partners did not exercise the required amount or required level of professional skepticism. They took things for granted. They have been a little casual about, they're a little passive about the work which has to be done. And so on the story goes. The second part of that is they did not collect sufficient appropriate evidence. These are two observations. So SA 200, the main point to be taken note of is that in the audits that we do, we have to be a little skeptical. We cannot assume that everything is perfect and fine. We don't have to. We have been trained not to approach an audit situation with too much of doubt, but a certain amount of doubt, certain amount of questioning mind is what SA 200 is all about. Next slide, please. Yes, at 200, we continue there. This we can skip. I have explained already. No, please hold on. Don't change. Now look at the topmost, bottommost line, where I put in a different color. That this is a question which we have to ask. Are we skeptical enough in the audit? Asking questions, being a little doubting, doing deep drills where required. We have something to suspect in the inventory, the quantity of inventories, the valuation of inventories, or some receivables which have not been seen, or some of the transactions which may look like an excuse for a transaction, something like a sham. Then we have to be extremely careful and inquire further and further until we either confirm or dispel that there is a problem. And if not, we are doing this. The take home today is if not skeptical and doubting, let us be a little skeptical. That is an action point of SA 200. Next slide, please. I hope I am audible and clear. Jayant, you are there? Narayana,
Sir, yes, audible, sir. Yes, audible, sir.
Okay, thank you. Yeah, SA 210. 210 is about engagement letter, agreeing on the terms of audit engagement. Now, how many of us have this practice of obtaining an engagement letter? We call it LOE in our office, letter of engagement in our office. Should not start an audit without an engagement letter. I should not take up any assignment or a phone call or even a WhatsApp message. Let there be a proper letter or minimum an email from an official ID to take up any assignment. So audit engagement letter, the format is given as an appendix to SA 210. I would share, there's something called an audit kit which I have. I shared with some of the members last year. I would try to do that, at least I'll send to the chairman and secretary, they can share it with the members. It's an audit kit where you have soft copies, editable soft copies of all these documents which we are going to discuss in the next 1 hour or so. So that's an audit kit where you have a format of this. So the engagement letter talks about the objective and scope of the audit, responsibilities of audit and management, financial reporting framework. Today we have schedule 3 as we have discussed in the case of companies, and content of reports to be issued by the auditor. Now, the question which we are asking here, so what is the topic today for discussion? Standards in auditing, are we doing it right in the light of peer review or in the wake of peer review rather? So the question here is, are we obtaining a letter of engagement without fail? The format is available in the appendix, but I told you I'm going to share it with you. Once I conclude the presentation, this will be in your, I'll WhatsApp to the chairman and the secretary. And if not, we have to obtain letter of engagement. You tend to think that I'm sitting in Vijayawada, I'm completely insulated from this kind of nafra or anything of that sort. Last year I got a call from a friend of mine who's there are only 4 practitioners in that small town in central town. It's very close to Shabarimala. Most of you would have come to Shabarimala as pilgrims. So this senior member called up and asked me, Jomon, I'm the auditor. I'm the auditor of 2 small private limited companies, but they happen to be in the group, in the same group of companies where there was a huge NBFC. There's some transaction with these small private limited companies, and they have been, searched and they have been taken to task. Rather, there was an investigation by the ED, and in that connection, they sent a checklist to my friend who's in a small town. And the checklist was literally, trust me, literally it was a checklist on compliance auditing standards. So they started by saying, please provide us the following. Dear Mr. So-and-so, dear CS so-and-so, please provide us with the following of the 2 companies where you are the statutory auditor. Copies of letter of engagement. This letter of engagement is not there. Management representation letter. Audit program. The proof that you have done the audit in accordance with standards and auditing. Disturbing, is it not? This can happen to any one of us. So please do have a letter of engagement for every audit that we do. But there's a question, should we obtain it every year? Now, it is not very important if you have a letter of engagement which is there, and if there are no major changes in the scope of the audit, etc. Normally, in the case of a company, as you know today, the auditor is appointed for a period of 5 years. So he can, unless there is a major change in the scope of the work, etc., the same letter of engagement he can continue for years. But ideally, if you ask me, it's better to get, it's a little bit of paperwork, get a letter of engagement every year. That is what I would advise everyone. Rather, that is what we should do. Next slide. SA 220 is about quality. Ideally, this should not have been there because there is SQC there. In the first classification we have seen, there is SQC 1, which is standards on quality. But we need to spend some time here. How do we bring quality into an audit? I was taking classes, I was introduced as been taking classes for a long time. So I used to ask these questions to the students. How do we bring quality into an audit? And then there are multiple answers. So then I change the question, like, how do you bring quality into a sambar or a chicken stew for that matter? So the right amount of ingredients, the right quality of ingredients, the right mixes, masalas, the heat control that you do, and finally you garnish it also a little bit. That's fine, but comes to audit quality, there are 2 things. One is processes. The second is people. So if by processes, they mean that your total compliance with standards and auditing. That's what we are going to see now. People, you should have a team of people. Today we have a shortage of people, but how much we do, we have to invest in people and get people and supervise their work properly. In our office, we have a weekly reporting system where the work is reviewed by the partner in charge. But we are fortunate to have a good number of CA students, even under the new scheme. But we did a complete full day training program for the students. And the first 6 to 8 months of articleship, the last Saturday, for us it's a 5 day week, but the last Saturday of the month is now called the learning Saturday. And the students prepare papers. There's a lot of interaction, not on any of the work that they do, on the things, the theory of the field of auditing or theory of compliance with Companies Act or theory of GST. Like that, there's a lot of programs. So we need to have a lot of training programs going on. So quality will come about, and quality will happen only if we stick to processes and we have a good team of people. Failing which, when you're doing it everything single-handedly or working with trainees who are not instructed, supervised, and reviewed properly, there's a huge risk of quality taking a beating. So SA 220 is about that, about the quality. That's the same spirit of SQC1. Can we have the next slide, please? Yeah, move on. That's okay. Yeah, hold on, please. Look at the last line there again. Do we have a quality perception as a firm of auditors? It could be a small proprietary firm, it could be a small partnership firm, 2, 3 partners, or it could be a firm with 10 to 12 partners. It can happen. So, the key question is next slide, please. Next slide. Yeah. Do we have a quality perception, a policy? Is it being monitored? Are they being reviewed and applied in execution? The quality policy is to say that all the audits will be discharged in accordance with standards in auditing or auditing standards, as we say. And the last question there in yellow letters, you can see the bottom border of the slide. How good is our team? We have to really work on, and the time you spend on the trainees, don't call it I'm spending time, but please say that we're investing time in getting these people, understand and then apply that at the work desk. We can move to the next slide. SA 230, we did discuss that when we discussed SA 200. It is about documentation. Now, those who are going to face peer review or those who are already in the process of getting a peer review done, if you are having a good informed peer reviewer, I'm sure that you are able to relate all these discussions. I've been moving around for the last many years, talking on many topics. Some of you know accounting standards, corporate audits, and things like that. But standards auditing today have gained substantial importance after it became mandatory under the Companies Act. That's 11 years old, we have seen. And now under the wake of peer review. I was doing a presentation in one of the branches in Kerala. We have 9 branches here. In Central Kerala, I was doing a presentation on standards and auditing, and there was a CA couple. Both of them were past chairman of the branch also, and they came up and they were there. They're very attentive, and after the presentation, they always used to come and interact, and they said, "Sir, we are now able to relate what you're talking about, the importance and the need to comply with standards auditing because our peer review is we are in the process of getting a peer review done." Then there are a lot of places where we thought that this kind of compliance would have put us in a better stead. So that's how it's very, very important. Now, audit documentation. The auditor's documentation should be sufficient to enable an experienced auditor to understand the nature, timing, and extent of audit procedures performed to comply with the standards in auditing and applicable legal and regulatory requirements. The results of the audit procedures performed and the audit evidence obtained. This will also be documented. I mean, talk about documentation. Senior members, what comes to our mind is a thick box file. May not be one, 2, 3 box files. I did my articles in Chennai, and we used to go for outstation audits to Bangalore, have come to Hyderabad, a lot of places, Bhubaneswar. And when you come back, you have, the thick box files. It was all paper during those days. But look at what I've written there now. How good is our documentation, physical bar digital? It could be electronic documentation, soft copies, emails, all this could be document. Photographs could be evidence. I'll come to a point there. Will it stand a test? What is the test we are talking about? Test is a peer review test, quality test. An NFR inquiry is a quality test. So it's very important that we pass these tests. Therefore, how good is the documentation and whether it should pass a test? Permanent documents and working purpose, you should make a segregation. But the best thing which I would strongly recommend is the AISB. The AISB, audit working paper template of the AISB. You can Google up on the institute's website and take a download. I think it is 9 chapters, right from introduction, documentation, reporting, everything. It's a very, very well drafted document. So I think you would do well if you just have a reference of the audit working paper template of Auditing and Assurance Standards Board. Significant matters arising during the audit, the conclusions reached thereon, and significant professional judgments in reaching the conclusions. What's the conclusion we are talking about? Finally, the result of an audit, the end result of an audit is an opinion, which we express through our auditor's report. So an auditor's report need not always be a clean report. It is saying that X is a good boy, or Tom is a good boy. Tom is an okay boy, except that he has some bad habits. The other one is I don't want to opine on Tom. That is disclaimer of opinion. And lastly, it is adverse opinion. Tom is not a good boy because there are a lot of issues with him. If it's a one issue, if it's one single issue, we will say it's a qualified opinion. He's an okay boy except for one. But if you say 1, 2, 3, 4, the long lists, if the list goes long and long, at some point of time, technically speaking, it will become material and pervasive, and that's the time you change the opinion from a qualified opinion to an adverse opinion. The Tom is not a good boy. So that's why we have to do appropriate opinion. So for all this, the work that we do, we should properly document. I know some of you would have attended the World Congress of Accountants in Mumbai, and the then President Aniket Talati from Mohammadabad, he said the president doesn't get topical in this large conferences. But I may tell you, given the recent experiences in the disciplinary committee, the way the regulators are looking at it, what I have to tell you now is please document your work properly. Not documented, not done. I repeat, not documented, not done. This is what the past president said. So, yeah. So we have to be extremely, extremely careful about the work that we do, proper documentation. Once again, I'm saying this need not be always paper. It could be electronic documentation, digital documentation. That's absolutely no issue about it. Next slide, please. 240, I think it's about fraud. It's not a very regularly happening, not generally applicable standard. But let us look at the question at the bottom border and then go faster here. Do we evaluate the possibility of fraud? And if you smell the rat, I have used a layman's term. If you find something suspicious, doubtful, do we reframe the plan? So we extend of substantive procedures, we extend that. A lot more confirmations, lot more questions, meetings with the top management, etc. Do we do that until we either confirm or dispel the doubt that either there's a fraud or which is your doubt has been cleared. It was only a feeling that there's a possibility of fraud. But the possibility of fraud cannot be what we say that we cannot be overruled. There's always a possibility. One has to be open to the possibility of fraud because of the corporate environment in which today, self-interest, all those things. So that is, I said, 240. Next one. Yeah, I said 250 is a standard which talks about the auditor's responsibilities relating to laws and regulations in an audit. Now, the key question here is the auditor expected to ensure compliance with all the applicable laws, regulations which are applicable to a particular entity? It could be a company, it could be a large partnership firm. And I'm sure that Andhra Pradesh, particularly in Guntur and all that, you have a large number of partnership firms which has hundreds and hundreds of crores of turnover. I had done an interaction with a firm which is based in Guntur, which is supplying chilies to a Kerala company, manufacturing masala powder company. And they purchased one particular year from this particular firm based in Guntur was 400 plus crores in one particular year. So that's the kind of size of organizations of non-corporate entities. So here the answer to the question is no, the auditor is not expected to ensure compliance. But if there is an issue which has an impact on the accounting audit function or which requires a provision or a disclosure, then the auditor has to be clear and open to that possibility. A shock cause notice from a pollution control board. Shock cause notice from the pollution control board is saying that we have information that you're violating some of the rules or discharging some of the effluents into a nearby river or the smoke which is called toxic smoke is coming out of your factory. Therefore, show cause why which no action should be against, not be taken against you. So the show cause notice, yes, if the company has replied, there's no further action. Maybe we'll go for show as a contingency in the notes on accounts. A show cause notice has not been satisfactory, so they levied a penalty. They levied a penalty against which the company is going on appeal to a court of error. Then becomes a contingent liability for a disclosure. You have to quantify it and show it. And the next stage, it's possible that the show cause notice has been received, a penalty has been levied, but there have been further evidences that there's a gross violation and there's a stop memo. They have sealed the factory. You cannot move on. Production has been completely stopped. Employees have been asked to check out and then they cannot. So it has been fully sealed. The factory has been sealed by any regulatory authority for that matter. What happens there? Is it just a contingent liability or a liability, etc., etc.? The whole question is where going concern would be at stake. It can happen that they may not be able to continue production or manufacturing or whatever. It could be a resort. It could be a holiday resort in any location which is ecologically fragile. So it can happen that one has to be careful. Are there non-compliances impacting warranting and accounting hit or disclosure? And there's also now there's a reference to NOCLA. Members were there. We have close to 70 members now. The members who are there working in the listed space, there's a reporting requirement of NOCLA. NOCLA is non-compliance with laws and regulations. NOCLA is it means that you have to blow the whistle loud if public interest is in jeopardy, or if the effect of a non-compliance is so impacting that it is not just enough to report it to the shareholders or to the board of directors. If you are a listed company, maybe you have to blow the whistle loud enough for SEBI to hear. If you're an NBFC or a banking sector organization, then you may have to make RBI hear your whistle, and that's how the NOCLA system goes. So this is what the standard 250 talks about in brief. Next slide, please. 260, communication with those charged with governance. Now you take, for example, we're doing the audit of a mid-size manufacturing organization. There's some audit we come across certain observations. Do we communicate it or just a discussion? Do we formally communicate it through an email or through a letter addressed to the board of directors? Or TCWG means those charged with governance. There's a wider connotation than just the board of directors. So that's what it is. So the standard requires that the auditor should communicate all those major findings with those charged with governance. We call it audit observations in our office. So we do an audit. We have this coming up certain questions, certain queries, certain observations which you have made. We send it to a communication and get a formal reply to that. And also be reminded that those companies who are slightly large companies, we have the ICOFAR reporting also. So the main body of the report, if CARO is applicable, CARO report, then ICOFAR reporting, internal controls over financial reporting, that also we have to comply with. There also this will help your inquiries on whether how robust, how effective the controls are. Based on that, you will finally frame your report on ICOFAR, etc. So the key point, the action point here is that at least not in very small audits, in audit of mid-sized or average-sized entities, companies or firms, the audit observations that we make or the audit team makes has to be complied with, has to be communicated to the management or those charged with governance. Next slide. SA 300 is a very, very important standard. If you look at the series, like 200 is preliminary aspects, preliminary aspects, planning, not preliminary aspects, overall objectives, engagement letter, documentation, all those things. 300 is more dealing with planning, gaining knowledge about the business, etc. 300 series. So this standard deals with auditors' responsibility to plan and audit the financial statements in recurring audits as well as in initial audit engagements. Now, let me ask you a question. How many of us use an audit program? We have not been using it because probably our seniors were not using it, or the firm where I did articles have not been using it. But past don't bask in whatever has happened in the past. The future is going to be challenging. Essentially, it is going to be rewarding. There's no doubt about it. But then there's also challenges like quality issues. The public are more informed. The regulator is more stringent than ever before. be under the lens. Therefore, we have to have proper audit program, a written document. You can also in a soft copy form, like we can use that. So there are two things to planning. One is the overall audit strategy. The second is a detailed audit plan. So the detailed overall audit strategy, we call it audit planning memorandum in our office. It could be a two-pager. It could be a broad framework of how we are going to do the audit. What are the thrust areas? Which is a team which is going to do it. The time frame within which the audit has to be done, and so on. That's how the story goes. A detailed audit plan is what we refer to as an audit program. So that is there. When I share the audit kit, it will become evident that this audit program is quite essential to ensure that all the aspects which should be covered in an audit has actually been covered, and also that there's nothing left out. And this will be a solid piece of evidence, a very very reliable, strong piece of evidence when we are taken to task or when we have to defend ourselves for the work that we have done. It could be in a court of law, it could be before the disciplinary committee, could be before the NAFRA, and therefore one has to be extremely, you know, careful and extremely involved in planning the audit. And planning is not a one-time affair. Let's say you're doing the audit of a large corporate, and Andhra Pradesh is going to see huge amount of development. New lot of projects are going to come in under the new equation, and there's huge presence in the national, in the union government. So there, a lot of things are going to happen. So when we work with the larger organizations, all these planning, all these have substantially wider meaning, and today we had a meeting with a client where they have an outsourced facility in Amravati. So soon I would be making a visit to Amravati. Hope to see some of you there. So that is asset 300, and move on to the next one, which is a very very important slide and standard. Next slide, please, Ramesh. Yeah, identifying and assessing the risk of material misstatement through understanding the entity and its environment. Now, what is audit risk? Assessing the risk of material misstatement. Audit risk, in brief, is the risk of expressing an inappropriate opinion, saying and certifying that it is true and fair when if actually it is not so. There are underlying issues, material misstatements, material omissions. With all that, we are still with that. We are saying that it's true and fair. About a year back, I had a presentation, a physical meeting in Belgaum. We had a very good turnout there. And one second. So we had a very good turnout, and after the presentation, the senior member came up and asked, Mr. George, we already have a clean report lying in the computer. No? Why should we change that? What could be my answer? And what should have been my answer? I said, sir, it's very important to know that probably the company was in good compliance, following systems, accounting systems, internal controls till last year. But it can change. Like what we talk about Tom. Tom was a good boy last year, but he got into so many bad habits. And Tom is such a good boy now, and Tom could be a bad boy next year. So those kind of considerations being soft on the client is not at all safe. I would say as a senior member or junior member, making those alterations in the system, issuing the appropriate report is very important. So audit risk is the risk of expressing an inappropriate opinion. And how do we reduce this? How do we mitigate this to an acceptable level? And as all of us know, and the whole world agrees that auditing is not absolute in terms of giving it. We are not talking about true and correct. It is true and fair. It is only reasonable assurance, not absolute assurance about the reliability and the true and fair nature of financial information presented in the balance sheet or the P&L or the cash flow statement. So material misstatement is financial through understanding the entity and its environment, including internal controls. What is the question here? Are we doing it right? Do we have good understanding of the business, revenue model, etc.? Or are we just doing it, we get a trial balance? It also happens these days. The other day, one of our former students called. She was good enough to do that. She said, sir, the tally data of a particular client, the accountant of a particular client sent me the tally data to my ID because I did the audit last year. And that's a very wrong thing to do on his part. And what he should do is any data that communicates between the firm and the auditee should be coming to the official firm's mail ID. My firm's mail ID should have come, but instead he sent it to a student's ID who she had completed articles. And this tally data, we talk about data integrity, but data is flying around. Tally data is there everywhere. So, and then we do the editing and all that. Today we have the challenges of audit trail also. One has to be extremely careful about it. So, understanding the entity, knowledge of the business is very, very important to be effective. I ask the questions, I used to ask this question to the students. What is the most important thing in vouching, for example? In the auditing paper at the intermediate level, we still have all these basic things in auditing, vouching. Students say that it should be supported, it should be authorized, etc. I say that's all fine. But what is most important in vouching is that a source document where a transaction is captured for the first time and then entered in the books of primary entry. What you should look for is the relevance of the transaction, whether that's actually related to the business of the entity. It's a business transaction or a personal transaction, one should check. All that's very important, and that relevance one will be able to understand and appreciate only if he or she knows what the business of the entity is. And also the strength and effectiveness of internal controls. Next slide, please. Yeah. I'll take a 1 minute break, 1 minute break. I'm back. Am I audible, visible?
Yes,
Sir.
sir. Yes,
Yeah.
sir. Yes, sir.
Yeah.
Yes, sir.
And
Please
this
get.
standard, this SA 500, we have come up 315. 400 series also, there are some important standards. Now, in the wake of the new reporting requirement and audit trail under the Companies Act, the SA 402, that is use of service organizations, that is outsourced to software vendors, the applicability of that gains some importance. But now we have jumped over to SA 500, which is a very, very important standard. We did mention that SA 200 talks about collecting sufficient appropriate evidence. Now, sufficient is quantity and appropriate is relevance. So, sufficient appropriate evidence would mean that you should have the sufficient quantity of good quality evidence. In why do we need evidence? Evidence is where based on which we would, draw conclusions and report on the financial information. So, sufficient appropriate evidence. And the question here is, do we collect sufficient appropriate evidence, written, visual, oral? Now, we were engaged by EY from Pune, SR Battleboy from Pune, to do a physical verification of a client in Cochin. Let me tell you that the entire process of physical verification, the first instruction was my partner and three of the assistants who went there for the physical verification had to take a group fee in front of the factory to make sure that they've physically been there. That photograph is part of audit evidence. And the whole process of physical verification done at this unit, which is now part of the Indigo Paints company, it has become the Cochin unit of Indigo Paints manufacturing company, manufacturing unit in Cochin in the industrial area. So the whole process was video streamed, live stream, and then that video file is part of audit documentation. And do we evaluate in drawing conclusions, or is just collecting evidence and keeping it? We have to, based on that, we have to essentially, collect this evidence to form opinions and finally make our assertions on true and fair, either true and fair or not true and fair. Yeah. Okay. Next slide, please. 501 audit evidence, specific considerations for selected items. In fact, I was with a client today. They are into manufacturing modems and have taken off very well during the COVID time because of the extensive use of broadband and connectivity and internet connectivity penetrations. And there, one of the considerations we finally started, we have been doing the system study for the last almost 2 months. My partner was working on it, and today we have almost concluded. The key point is that, the inventory controls are very dismally poor. And the inventory shown in the balance sheet till last year, that audit also is coming to us now under rotation. So till last year, the inventory shown is almost double the real value of it. So it's 40 crores, 20 crores overstated inventories. So SA 501 as an offshoot of SA 500 is a specific consideration for selected items. One of the things which very important they highlight is certain aspects of inventory. In very brief terms, the standard expects the auditor or his authorized representatives, the team, to go and do a physical verification. Now, do oversee, make sure that there's a physical verification by the management. We don't have to carry sacks on our head. We don't have to do the counting of some, it could be some messy inventory or but you have to essentially go to the floor and see what's happening. And today, drones are used to do physical verification, open yards, etc. And also, there are event counters which you can use for weighing and all that. All those things can happen. So, we all know that many of the balance sheets of the clients have huge inventories which are not there at all, which does not physically exist. I had to do probably a review of financial statements and for syndicating a loan of a seafood processing company in Cochin. We have a lot of seafood exporters here, and there also has a coastal line where we have a lot of seafood and resources. And here the turnover of the entity was 22 crores. The annual turnover of the entity was 22 crores. And inventory was 20 crores. And they had a facility of about 15 crores from the bank. How can have 20 crores of inventory with 22? Annual turnover is only 22 crores. So seafood inventory, does that stay for almost full year? Even 3 months for that matter. Ideally, maybe 15 days to 10 days, months time. Maybe some seasonal products will remain. So it's hugely overstated. So the standard expects the auditor to make sure that the inventory that you're finally saying that there's in the balance sheet and putting your signature on the dotted line, make sure that the inventories do exist. They are in good condition. They are valued based on accounting principles. Accounting standard 2, valuation of inventories. Cost or net realizable value, whichever is less. All those things have to be there. That is one of the things. So do we attend, supervise, oversee physical verification? The second part is about litigation and claims involving the entity. If there are claims against the entity, we have to have disclosures in the financial statements. Not. It could be an income tax demand which has been appealed on, or it could be a GST thing which is now under the consideration of appellate authorities. So there we have to litigation. We have to really inquire. I had this experience where whenever we ask, is there a litigation or any case against the company? The standard answer is no, sir. We are completely compliant. There are no issues. Then one of my senior assistants she just verified the legal and professional charges account. And there's an advocate's bill. There's a lawyer's bill who's saying that the fees for defending the company in a PMLA case, something similar to that. So there are two things there. One is that what they said is absolutely not correct. They said we are fully compliant, but they are already engaged an advocate. The top people should know, or the finance manager should know, that a lawyer has been engaged and there's a case being fought against, there's a charge or demand or charge or allegation against the company which we are defending. That has to be essentially provided, disclosed in the financial statements. And then the second issue is that the entire reliability of the answers they have been giving to your queries, the expression they have been providing has become questionable. The integrity of the person is suddenly at stake. So that's something which one has to be careful. So do inquire about sweets and make sure that there is proper disclosure. And the third one is applicable only when the segment reporting is applicable. So that is about 501. And we will go to the next slide. Jayant, Narayan sir, I mean, what's is it okay to have another 10 minutes? Is it okay? 10, 15 minutes to round up?
Okay, sir.
I think we started a little late and there have been some hiccups in between. So it's getting extended. Do you have a break, a coffee break or something? Or we'll finish off?
No break, sir. We have another 30 minutes.
30 minutes time. Okay. We probably will have, I may not take as much, but then we can have a Q&A session towards the end. And if by that time, if Prasanna joins, it will be nice. We'll see.
Okay, sir. Okay.
Okay. All right, sir. Okay. Yeah. Okay. Now this is about external confirmations, 505. Year-end confirmations, balance confirmations, as they're called. This is a very important thing. It's not just about sundry debtor or bank balances. It could be about receivables, trade payables, staff advances, loans from banks. Everything has to be included. External evidence, reliable external evidence has to be collected, and that has to be corroborated with internal evidence and make sure that they match and they agree. That's very, very important. External confirmations, how much we say, we have to collect evidence or year-end confirmations. And if we are not able to collect, I think we'll go to the next slide. See, do we obtain the question which I'm asking is, do we obtain confirmations for balances, documents, and goods? Not only balances. What about documents? You ask for the original of a title deed, sale deed of a property which has been bought during the year. Let's say worth 2 crores. You say that, sir, we have given it as collateral security for a loan we have taken from SBI or Canara Bank. You have to get a confirmation from the bank saying that the original is with them as an equitable mortgage. Similarly, you have subcontractors. We call it outsourcing now. And some of your materials at the year end, reporting date is with somebody else. We have to get confirmation for the quantity of the materials, and they have to relate with goods sent, the dispatch note, subsequent receipt of all these job work done materials. All those things have to be checked in. So that's very, very important. And how do you pick up a lot is also very important. Debtors with credit balances, trade payables with debit balances, non-moving balances, overseas debtors. So we have heterogeneous data from out of which you make a sensible thing and select a few. And then based on that sampling, we have to essentially do that. And if it is not available, we should insist that there is sufficient disclosure in the notes on accounts. And if need be, we'll have to qualify our report. And if you have some comfort, maybe some subsequent realization, some of the realization, some communication, at least an EOM, emphasis of matter paragraph, as envisaged in SS 706, at least that should be given. That's the way we plan. That's the way we should deal with external confirmations. Next slide. Yeah, 510, initial engagements or opening balances, a very, very important standard. In one of the introductory slides, I did mention about the importance of opening balance checking. So today there's technology where we all used to do in our articleship days, put a tick here, put a tick from the previous years, audited accounts, schedules, subschedules, groupings, put a tick there and put a tick here. And now there's no place to tick. So there's technology which we can, match the opening balances, and it comes out with exception reports where differences are there. There could be some mix-up, and finally make sure that the opening balances, in terms of figures, have been brought forward properly. Is that enough? No. What about the sustainability of those balances? Are those balances really, if it's a trade receivable, is it receivable? How old is it? If it's inventory, is that inventory opening stock is really existing? What is the quality of that, etc.? If there's a loan given, is that actually receivable? Related party transactions, balances arising out of related party transactions. All those things have to be checked. There's a ledger account called vehicles, motor vehicles, and there's a balance of, let's say, 2 crores. You ask for a breakup of how many vehicles are there. If it is there, make a reference to the fixed assets register also. And you see that, okay, there are 3 pickup vehicles, 2 small cars, and the MD's BMW. Okay, ask for the RC book of all these things and make sure that all these are registered in the name of the company and not in the individual names. So what I'm trying to say here is that it is not just a clerical exercise. It is not enough to just tick here and there, but are these balanceable, maintainable, and a spirit of KM is not there. So are these balances maintainable? Land, for example, how many parcels of land? Where are the title deeds? See the title deeds. Keep copies for your records. Soft copies, fair enough. That is the spirit of initial engagements, opening balances. Next slide, please.
Ramesh, next slide.
Analytical procedures. This is something which senior auditors would get the final statements, final draft reports, etc., and then do the circling. What is this? There's some issue here. Please highlight on this, or go further on deep of this. Get me the breakup of this. Let me have a chat with the board or audit committee on this. All these things can happen. So that is what analytical procedure is all about. They are called overall tests, ratio analysis, trend analysis. And today, ratio analysis is reasonably easy, or rather, it has been made easier because the revised Schedule 3 speaks of, or rather, asks us to give a complete tabulation of most of the financial ratios with previous year figures. And if there is a variation of more than 20%, 25%, if I remember correctly, the reason for the increase or reduction also has to be given as a note in the notes on account. So, do we do a ratio analysis, a trend analysis, and analyze adverse trends? Look at that. Now, what is this analyzing or investigating into adverse trends? You have information that the raw material prices, 60% of the raw materials which are forming 60% of the total raw material consumption, the prices have been lying low during the financial year. Throughout the year, Kerala, for example, natural rubber sheets, the price have been lying low. And you are doing the out of a manufacturing entity which is using rubber sheets as raw material. It could be tread rubber, it could be tires. No, how do you expect the GP to behave, the gross profit to behave? Raw material prices have been lying low. Other factors remaining the same, hypothetically at least. We expect the gross profit to be substantially more, is it not? But you see that when you do this, analytical test saying that GP ratio has slipped to 35% from 45% or 40%, whatever. Then you check in and say that there's been some issue, or it is that a bill has been accounted twice, or the inventory valuation has not been right, and so on. A lot of issues can happen. I mean, a lot of things can come out of this kind of overall test. So, do we do this? And if we are not doing it, we must. That's analytical procedures. We can go to the next slide, sir. Sampling is something which many of us do not do properly. I too used to confess, saying that the whole purpose of sampling is, now it has become a cliche. Say that AI is coming, RPA is coming, so the bots do not require a rest, coffee breaks, or dinner, or they don't have family issues, so they work 24 hours. Just plug them into power, and they will, whatever they have been programmed, they will mechanically do it. So some of the people have started saying that selective verification or test checking would be a thing of the past. Why? Because you sort of reduce the extent of checking because of the limitations we have in terms of time, human capability that we have. So here is a bot which would 24 hours flip through and do RPS. You have some of you have worked with the robotic process automation, where all that would do. But then all said and done, still we do some kind of test checking or selective verification. Anything less than 100% verification requires audit sampling. Taking a few samples out of the population or the universe, as they call it in statistics. It could be 12 months. If you take the financial year, it could be 12 months. It could be the whole lot of journal entries or cash transaction that has happened. And then from out of which you have to sensibly take a lot as a sample and analyze the quality of the sample, the properties of the sample. And then you try to extend that to the whole universe, and make sure that it is acceptable. The risk of material misstatements, irregularities are acceptable. So that's how we do sampling. So how do we pick the sample is a question here. There have been a lot of judgment sampling. So you ask the assistant or ask the partner, which all months did we do last year? Which all months? So last year it was, I think last year it was August and November, or August and December. Okay, let's do September and March. Now this is judgment sampling. This can happen. So this is not defensible. This is not defensible because it doesn't have any rational. It's not using any rational method to ensure that the sample is really representative. So the crux of the standard is to say that the sampling process should be based on some statistical methods, and today technology comes to help. We have started using a software called Azure AI, not fully. In some of the major audits, we have started using Azure AI, where you have to where you have to combine or rather connect the accounting data to the software. The software goes around and then gives us the materiality levels, the right sample to be picked up and all that. So this is where human intervention is less and judgment is also less. It's system driven and therefore more defensible. That's the spirit of audit sampling. Going forward, I think all of us have to. I'm not promoting any sort of there's any audit. Today, when we go to the major CA conferences, and I hope most of you would come for the SRC conference, which is coming up in August. Preparations are on. Chairperson Geeta had called me yesterday to seeking some sponsorship from Kerala. And some of you would have attended my conference as chairman 1920. All good to have, good to host you here in Cochin. And now this is Bangalore, so most of us will go to Bangalore on August 9th and 10th, is where in the palace grounds. So when we go for this kind of, earlier we had book stalls, some law house book stalls. Today we have a lot of, apps and, these kind of audit software stalls. And it makes sense sometimes to give a shot on it. Maybe it may not be fully successful. Talking about external confirmations in Mumbai World Congress of Accountants, there was a stall which is called confirmations. Confirmation is a software which helps us pick up the sample on year-end balances and send mails out of that and to respond to and also do the reconciliation. It's an advanced thing. So those things we have to start using. That is in the context of talking about audit sampling, which now, in conclusion, we say that sampling has to be essentially done based on some rational, defensible method, ideally technology-based or some statistical methods. Only then it will be representative. The most important attribute in audit sampling or any sampling for that matter is that you and I, now if I think the numbers have gone down a bit, okay, it's about 50 plus now. That's okay, understandable. And there's 50 members, if you're picking up 5 of us from this, every one of us, me, Jayan, Narayan sir, all of us have the equal probability chance of getting picked up. Everyone in the audience, I mean, on the screen, not in the audience. And so on the screen should have that is the most important attribute in sampling. So that will happen only if we are using some rational methods. Next slide, please. Yeah, while designing an audit sample, the auditor shall determine a sample size sufficient to reduce sampling risk. Auditor shall select items of the sample in such a way that each sampling unit in the population has a chance of selection. So how do we pick up the sample? How do we ensure randomness of the sample? And use rational methods. Excuse me. Next slide. SF 570, going concern. Now, all the members would agree that in accounting standard 1, and as we learned the basics of accounting in our college or plus 2 days, we were trained, we are told that accrual, consistency, and going concern are accounting assumptions. Accrual, yes, consistency also can be an assumption, but in today's dynamic, swift-changing, risky VUCA world, no, everyone agrees that going concern is not a safe assumption anymore. The old theories have not been rewritten, though it's overdue. But going concern has been a huge issue. All of us faced the pandemic. I remember, I think we did a presentation, Vijayawada branches, Vijayawada Gundur together during 2021 COVID time on SF 570. I think I would have addressed 30 plus branches on online meetings on SF 570 during the COVID time because businesses had come to a grinding halt. There was no purchase, there's no consumption had reduced. No, the ways of doing business, the methodologies had changed completely. All the holiday destinations, resorts were kind of getting closed down. Business in restaurants, people coming in, of course, Swiggy all flourished, home consumption flourished, home gardening flourished, pets business flourished, but then many of the businesses we had this down. So in an auditing situation, the auditor has to ensure that going concern is not at stake. That the entity have the wherewithal, the resources to move on, at least for not indefinitely in the future. We cannot predict future to that extent. Reasonably into the future. Today, all of you agree with me that in CARO, there's a reporting requirement based on the financial ratios financial statements, financial position, management plans, whether the entity would continue. Do you see any material uncertainty? Foresee any material uncertainty in the entity going forward, at least into 1 year? In the case of companies, Caro report. So, do we think about this and analyze the situation, and do we smell the indicators? Where do you find that this going concern can be at stake? Substantial number of employees have been retrenched. Branches have been closed down. There are mounting statutory dues. All the loans have become NPA. There's an employee unrest. Lot of overdues of payments to many people. All regulatory restrictions. With all that, one tends to doubt whether this entity can pull on or not. If that happens, if going concern is at stake, then what happens is even our non-current assets like land, building, machinery, vehicles, all that may have to be put up on the block put for sale. So there also the considerations of fair value or net realizable value will come to play. This Ind AS, I don't remember the name of the standard. The Ind AS says that discontinued operations and non-current assets held for sale. The name says it all. If you are discontinuing your operations, your non-current assets will also be held up for sale on the block. So do we still carry them at loss less depreciation? In a distress sale, if the land is going to fetch only this much, we have to write down. Similarly, we will also work probably on an OTS with a bank or a financial institution. One-time settlement, say that, sir, I'm finished, I have no money to pay, so please give a waiver. And 2 crore loan, 1 crore is waived. That has to be returned back into the P&L. All these things have to be done. So I say 570 is a standard which warns us about the possibility of the entity not continuing to be a going concern, and what are the steps to be taken, what are the accounting treatments which have to be changed and then provided for all the impending losses on a distress sale, etc. Next slide, please. 580 is a standard which talked about quite a lot, but then compliances are still very poor. Written representations. Have you heard? I hope all of you are familiar with MRL, Management Representation Letters. Now, what happens is during the course of an audit, we have large number of queries which are getting answered. Sir, do we do physical? Yes, we do physical verification. Do you have any other bank account? No, sir, we don't have any bank account. The cash balance of 31st March, we could not verify what is the balance, etc. There are n number of things which we talk about, ask about, and we get answers. This standard says you have to get all these responses in writing. Sorry. These responses have to be got in writing. That's very, very important. And now this year, what's the only additional reporting requirement in the case of company audit in the financial 23-23? It is audit trail. Audit trail, the institute has come out with an implementation guide, IG on audit trail. Please go through that and do informed reporting. And the audit trail also, in the management representation letter, we have to get written confirmation from the management about the audit trail. What are the questions which you have to answer on audit trail? Does the software have the feature of an audit trail, or otherwise interchangeably used term is edit log? Has that been enabled throughout the reporting period or the financial year, if it's a full year? Reporting period if a lesser period. And whether that has been tampered or disabled during the year. These are 3 points which you have to answer. It's easier said than done. Go up and see the report of Infosys or TCS. There are qualified reports where outsourced agencies are used. So many of the multinational firms have played safe because audit trail is something one has to be extremely careful about. They can play around with. But if there's a trail, which means that there's a track. What is that? If there is a change, a rectification, or a misleading or some fraud has happened and the entry can be traced, what is the amount? When was it done? And who has done the change or amendment? So the trail will tell us a whole story that it is the transactions have traveled through. So that's also very important. So do get MRL, management representation letter. Again, I will share this audit kit with Jayant and Kishore sir, Rahul and Kishore sir right now, which can be shared to the members if you have the WhatsApp group in there. So this is importance of written representations. Can we move on, please? That brings us to the, yeah. Written representation is to support other audit evidence relevant to the financial statements of specific assertions in the financial statements, and this cannot be taken as a substitute for other procedures. We do all the procedures which are required to be done, which ought to be done, and based on, in addition to that, we get the management to reiterate, confirm, reconfirm that yes, we have said this, these are the things which are there, these are things which are not there, these are the bank accounts, we do not have any other bank account, inventory has been physically verified, and this is the value of it, receivables would be received, etc., etc. The format of that, once you get in familiarized, it will become clear. So do we obtain MRL? Has that been updated 21-22 particularly? 21-22 was a year of change, Schedule 3 change, Caro change. So we must update the MRL, customize it, if need be, revise it every year, and do obtain it duly signed by a senior representative of the management. Next slide, please. So that from that we have now moved to the reporting standards. The last 3-4 standards are there. Now the format old revised, SA700 revised and SA7 old revised. It has a title, the addressee, and as you know, the opinion comes first. Earlier there was a basis of opinion, comes later that. Later in this next paragraph, after opinion, basis of opinion. And basis for opinion can be basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. And that is how it is structured. Going concern, if it's stake, yes, that has to be highlighted in the auditor's report. Key audit matters, for the time being, applicable only for listed companies. Management responsibility, auditor's responsibility, that we normally write all those things. Other reporting responsibilities under the other legal and regulatory requirements. And that is where the audit trail point would come, other legal and regulatory requirements. Lastly, signature, date, and place. Anything missing there? Any of the participants can unmute or admin can unmute. Signature, date, place. Anything missing?
Nothing, sir. Nothing.
UDIN has to be there. Also has to be there in the auditor's report. So UDIN is something which insulates us from, all these tax practitioners and unscrupulous operators. We should not associate with them. In our office, is a complete no entry to those people. And we should have nexus, one-to-one contact with the client. KYC is a must. Somebody should not bring up set of balance sheet and say that this is somebody's balance sheet and you sign it, I'll give you a fees. He could be the so-called consultant should be kept at a distance, kept at bay. They should not be. So you didn't make sure that the UDIN OTP comes to your phone number. It's very, very important. So today I was traveling and there has to be a report, and then I said I was traveling, and then the student called up and said, "Sir, I'm generating UDIN. Can you give OTP?" And then called up, and then I had to tell her this thing. So the UDIN, the OTP had to be there. We have to have absolute control over that. Otherwise, a huge misuse can happen of UDIN. So use UDIN very judiciously. And of course, we have the electronic record of that. The UDIN register can also be generated. Next slide. The thing we discuss is key audit matters as of now is applicable only for listed companies. What it means is that, there's interplay between key audit matters and emphasis of matter. Key audit matter is something which an issue or a matter which came up during the course of the audit. You raise this point, like audit observations, as I mentioned earlier, SA 260, and then the management gave some convincing explanations and decided not to go for a qualification or an emphasis of matter paragraph. This has to be brought to the attention of the users, the stakeholders. So in a tabular form, if you see some of the listed company auditors report, all these formats, there's a tabular form, they'll get a key audit matter and the response. Based on that, we have to disclose. So key audit matters, this is the spirit of it, for the time being only for listed companies. Next slide, please. Yeah. We have seen this as a 705, how to make modifications auditor report. Clean report is saying that the financial statements give a true and fair view. Qualified opinions, except for, that is how we qualify a report today. Basis for qualified opinion. In the opinion, we say that except for matters specified in the basis for qualified opinion paragraph, the financial statements give a true and fair view. It could be one or two. about inventory, about receivables, about certain revenue recognition, about certain methodologies I've used in, deferral or whatever, or treatment of intangible assets, etc. So it could be qualified opinion. A disclaimer is saying that, oh, I'm sorry, no, I'm not opining here. In the absence of the required amount of information, sufficient appropriate evidence, we are not able to express our opinion on the financial statement. That's a disclaimer. And lastly, Sir Edwards saying that the financial statements do not give a true and fair view. That is what an adverse opinion is. And what is that we have written in the bottom border? Are we so used to clean reports? Like the Belgaum member asking me, is there a scare about qualifying a report or rather issuing an adverse report? Issue the most appropriate opinion. Having said that, is there a scare? Last year, in the case of a Kerala state public sector undertaking, the issues were so, grave. It was so, I would say that the magnitude was so high that we issued adverse opinion. So the CAG of the state convened a meeting and asked me, why did you issue an adverse report? I said, sir, we have a standard. We are guided by SS 705. It states that in certain situations, we have to issue an adverse report with reasons. We have to list out all the reasons. And sir, time permits. I have 12 reasons why I have given this. I explained him in detail, but to cut the long story short, using some political opinion, political influence, they removed us from the audit. But that doesn't mean that we should not issue adverse, but it's public money. And they've taken a lot of about 30 crores from Union Bank of India. Bank's money is our money. So it's public's money, therefore, that got gone. So there have been some bitter experiences, but that doesn't deter us from, being upright in our professional approach and giving the most appropriate opinion in the given circumstances. SS 705. Next one is, I think, last but one slide, SS 706. Next slide, please. Yeah, emphasis of matter paragraph. This is slightly softer version of an auditor's, of a qualification, where you see that certain matters which are of importance but does not warrant or you would want to qualify the report, where you have this slot called emphasis of matter paragraph, and that we conclude by saying our opinion in this matter is not modified. That is how we conclude. So EOM is a safe option than a soft option than a qualified opinion, and we have to use it appropriately. So, my dear colleagues, we have been working on, discussing this for almost close to 2 hours now. With some initial hiccups, thanks to my son who supported me promptly, we could sail through. And thank you for the patience, Jayant, Ramesh, all of them, and the in charge of the program, Narayan sir, and Chairman Absentia. Thank all of you for this giving so much of time. There's still about half a century people online here with us. So it has been plus a rewind for me. And I remember last time I came to Vijayawada, we had this discussion. That time Ganesh Balakrishnan was also not there. And very unfortunately, he's not there with us. We had breakfast together and he was very unhappy that I did not wear a suit. I said, you are not just a speaker, you're past chairman of the region. So next time you come, you properly wear a suit. And I could not make it to Hyderabad when he made his last journey. Anyway, it's all sad memories. But of course, coming to Vijayawada is always a pleasure. So looking forward to more occasions to interact with the intellectual cream of Vijayawada. Thank you so much for the opportunity. And if time and mood permits, we can take a few questions. Otherwise, once again, a big thank you. Please, I will also probably send a message and speak to Devi Kishore sir tomorrow. I think he hopes he gets better. Let him
Sure,
let us
sir.
wish him a fast recovery. And yeah, this getting responses. Thank you. Very good presentation by CA Jomon. Thank you so much, sir. And my last slide is with the branch now. You can share it with the members, and my phone number and the email ID is there. You can also share that. And I'm not a candidate this time. I'm not contesting election, so there's no political intention in saying that my number and can be shared. It's only with a view of sharing knowledge. It is always when there's a question, we try to learn together, and that is how I've been doing this in the last close to 25 years. A big thank you. And unless whether we have questions, we can take it. It's back to you. It's back to you, Jayant and the team. Thank you so much.
Thank you, sir. Thank you for the detailed presentations, even though we started with few technical glitches, but once you started your flow, as always, driven the show. Thank you very much for joining for this virtual session. Anyway, Vijayawada branch is always ready to host conferences by people like you. And you, in the down the line, we hope you will come physically to Vijayawada branch and we'll do together.
Yeah.
Thank you, sir. Thank you.
Thank you so
So,
much.
yeah, we are ending
And
this
all of you.
conference. Thank you.
Thank you.